Hello and welcome back. So we are on part 2 of SCSS and SSY schemes. Now remember, we had discussed part 1 of this video series. So part 1 was more about the basics, the concepts. So if y'all haven't seen that video, please watch that video first and then y'all will understand this video better. So in the last video we had discussed all about the basic structure, but today in part 2 we will be discussing about the deposit structure, the interest calculation, the payout methodology, how the returns differ for both these schemes, because SCSS is return oriented. It's more of income oriented scheme, while SSY, as we discussed last time, it is more about building a financial corpus for the girl child. So it is more accumulation oriented scheme. We will also be discussing and providing a clear understanding about the tenure, the maturity, the extension, the withdrawal rules for both the schemes. Now here the withdrawal is allowed, so it makes the schemes flexible, but at the same time it also encourages long-term savings discipline, and hence there are some rules pertaining to it. We will be explaining the taxation framework, the taxation, what is triple E, that is triple E exemption, and whether SCSS is taxable or not. So all that will be cleared in today's discussion, and that will show us how the investors should align their goals. The SCSS का क्या goal है? Goal is for retirement planning, while SSY it is for certain milestones like education, marriage. So that is more about the long-term family goals. So let's get started with SCSS first, and then we will go on to SSY. So talking about SCSS, what is the investment amount? So minimum है 1000 rupees. So at 1000 rupees you are allowed to open the account. So that makes it affordable, it makes it inclusive for people of all income levels, and also it is very helpful for small savers. So 1000 it starts with, but what about the deposit multiples? Deposit multiples should be in multiples of 1000. So firstly, you should understand that this is a one-time lump sum amount that has to be paid, okay, in the account. So that is why it has to be planned according. Planning is very, very crucial, because you have to choose an amount that will suit your financial goals and your retirement needs as well. So 1000, 5000, 12,000, 1 lakh, it's all permitted. But whether 1500, whether 26,500, will that be permitted? No, that won't be permitted, because that is not in multiples of 1000. Now what about the maximum? We discussed the minimum amount. Yes, very small amount which can help you build a big safety net. But what about the maximum investment amount? Maximum amount है 30 lakhs, and that is aggregate across all SCSS account. Means an individual can have multiple SCSS account. So an aggregate of all those SCSS account that should not exceed 30 lakhs. So we discussed the minimum, we discussed the maximum, and we also discussed that it has to be just one time lump sum deposit. No periodic, जैसे कि recurring deposit में होता है, where you can do a periodic, or SIP में you can do top up. Here it is not allowed. So that was the investment amount rules. Now moving on to the interest rate structure. Currently it stands at 8.2% currently, which is quite attractive for a risk-free investment. The rate is locked in at the time of investment. So the time you put your investment, जो rate है, that only will continue for the entire, that remains unchanged for the entire tenure. What about the interest? Interest is paid out. It gets credited to your bank account, and that is on 1st of April every 3 months. 1st of April, 1st of July, October, as well as January. Now to just give you a perspective, this is the interest rate since the inception, since 2004. So it was around 9% earlier, and then in the last few years it has remained 8.2%. So that is how the interest rate structure looks like for SCSS. Now let's look at the tenure and extension rules. So initial tenure is 5 years. आपने account खोला 5 years तक you can it will get matured. But what about the completion of 5 years? After that, yes, you can extend it for another 3 years block. You just have to apply it in Form B or Form E, which is at the bank, and this has to be within 1 year of the maturity. That means effectively आपको 8 years you will get as tenure for SCSS. So what about the premature closure? But if you close it prematurely, that is before 5 years, because 5 years is the normal tenure, but if you close it before that, okay, prematurely you exit from there, there are penalties that are applied. If you close it within 2 years, then penalty is 1.5%. If you close it between 2 years to 5 years, then the penalty gets reduced, but still penalty will apply at 1%, because SCSS wants to encourage long-term savings discipline. Now post maturity, if it is not closed, if it is not extended, it becomes a matured account. It will earn interest, but it will earn interest at the post office savings account. Okay, so and that is also up to 2 years. So after that, maybe you will not receive interest. So that is why I encourage you that if you all are holding SCSS, only if there is some urgency, otherwise keep it for 5 years. Moving on, let's understand the premature withdrawal rule. So premature withdrawal rule, what about the interest? 1 year में अगर आपने withdraw किया है, then there will not be any interest paid, और अगर any interest, if any interest has been paid to you also, that will be deducted, that part will be deducted from your principal amount. For example, let's look at the one that we just discussed, a penalty. After 1 year, before 2 years, we saw that 1.5% of the deposit amount is deducted from your principal as penalty. For example, आपने invest किया है 10 lakhs. Okay, so 1.5% means 15,000 will be deducted from your principal amount at the time of the closure. Now using the same example, in case not, if you have not prematurely exited between 1 to 2 years, but you exited after 2 years but before 5 years, before the maturity, that is 2 to 5 years के बीच में, then the penalty is 1%. Means if it is 10 lakh lump sum is it, then 10,000 will be deducted. So notice the pattern कि if the tenure is longer, okay, then the penalty will be lower. So the structure encourages investors to treat the SCSS as a medium term, not as a short term, short term parking tool for the amount. Let's understand the tax treatment for SCSS. So principal investment, that is up to 1.5 lakh, that is eligible under ATC, that is the amount that you invested. What about the interest income? Interest income is fully taxable, and that is as per your income tax slab. So whatever interest you receive, that gets added to your total income, and that is fully taxable. So since SCSS का जो interest है, that is paid quarterly to you, so that income will get added every year. But there is a relief available, and the relief is ATTTB. You can claim an additional deduction of up to 50,000. Okay, this is for senior citizens on the interest income from the savings account. All right, so that includes, so this is on the total interest, but it includes SCSS interest as well. What about TDS? TDS is deducted if the annual interest exceeds 1 lakh for senior citizens above 60 years, but below 60 years, then it's 50,000 if it exits. But there is an exemption for senior citizens, that if the total income for the year is below the taxable limit, then you can submit form 15H to avoid the TDS. Now let's move on to SSY. SSY, as you all know, that this is to create a financial corpus. Sukanya Samriddhi Yojana, to create a financial corpus for the girl child for achieving her milestone, that is education, marriage. So what is the minimum contribution? Minimum contribution is 250 per year. Yes, this is a small amount, but if it started early, it can actually lead to a big, large corpus because the tenure is so long. The tenure is around 15 years where the amount can be deposited and contributed. So that ensures inclusivity, it ensures affordability. Even families जिसके पास limited income है, they can start saving early for their daughter's future. So this is not how much you start with, it is whether you stay consistent, okay, and how early did you start. What is the maximum contribution? It is 1.5 lakh per year, and this is exactly the same as it aligns with the ATC limits. We will be discussing the exemption, the tax efficiencies as well related to SSY. What is the contribution period? 15 years, though it will get matured at the when the female reaches 21 years of age. But after 15 years of age, after 15 years, the interest will keep accumulating on it. So SSY encourages regular annual contribution, and that will help build a secure financial corpus for the girl child without any stress on the family. Now let's understand the maturity and account life. 21 years. So the account will mature at 21 years, but interest between 15 years, because up to 15 years you can contribute, 15 years to 21 years it will continue accruing. What is the deposit period? Deposit period mandatory for the first 15 years. This is just what we discussed, that it will continue to get interest until maturity. But what happens at maturity? ये जो पूरा balance है, including accumulated interest, that becomes payable to the girl child upon application and proof of the identity. So that means the contributions was at 15 years, but the maturity happens at 21 years. What about the interest rate structure? It is around 8.2%. Interest rates are notified quarterly by the Government of India. It is compounded annually. It accelerates the corpus over the years, and interest will be credited. Interest, unlike SCSS that gets credited to your bank account, here it will be credited on the maturity and it is not withdrawn periodically. What about partial withdrawal rules? Partially, can they withdraw from SSY? Yes, but there are some eligibility criteria related to it. What is the age restriction? Age restriction is that the account holder should be 18 years of age, or she should have passed 10th standard, whichever is earlier, but that is the age restriction. What about the purpose? It is only for the higher education or marriage. So the funds can be withdrawn for these two purposes. So you can't just withdraw it for general facility. ये purpose driven है, and it is meant to protect the long term goal of the scheme. So what about the amount? So up to 50% of the balance from the end of the financial year preceding the withdrawal application year. For example, if the balance as of 31st March last year, okay, suppose we take FY24 was the last year and the balance was around 10 lakh. So the maximum you can withdraw is 50% of this 10 lakh, irrespective of whether, even if the amount जो current account balance है, it is higher than this 10 lakh, you can only withdraw what is as on 31st March. Okay, so that will be the amount of withdrawal. So this ensures that even जो partial withdrawal है, उसके बाद भी a substantial portion still remains in the scheme, and that will continue compounding till the girl reaches the age of 21. Let's understand the tax treatment related to it. So here you need to understand that it is triple E exemptions. So firstly, deduction on deposit, like how we got with SCSS. So contribution to the SSY eligible, that is the parent's guardian, can also claim the deduction of up to 1.5 lakhs under section 80C. The interest is tax-free. Interest is getting accumulated but the interest that accrues and is credited to the account, that is completely tax exempt. Even the maturity, once the entire amount is received by the girl child, that is also free from income tax. So this is a very good benefit. It enjoys what we call is the triple E status, that is exempt, exempt, exempt. So let's break that down. First, again, I'm repeating: deduction on deposits, tax-free interest, as well as tax-free maturity. So this makes SSY not just a savings product, but it also makes it a tax planning tool. So that wraps up our part 2 of the SSY and SCSS series, where we discussed a whole lot of aspects here, where we under SCSS we discussed the interest, the deposit tenure. We saw that it is just a one-time lump sum investment, payouts related to interest, how it makes it suitable for income oriented schemes. We saw the withdrawal, maturity and extension rules. They are strict regulations, that is to protect your capital. It ensures that the purpose of these schemes, they are also met. So taxation is also a key differentiator here. We saw how SCSS interest जो है वो taxable है, TDS applies, but SSY में it enjoys the triple E status. आपकी जो contributions है, interest है, maturity amount है, all are tax free. So that wraps up our part 2 of the series. Now in the next part, what is expected is that we will be discussing the operational part, the procedural steps on how to open or how to operate the account, who can invest, who should avoid, and we will also be comparing the schemes with the other schemes as well, as like FD, PPF, mutual funds, and also we will be understanding the common mistakes. So ultimately, do understand that these schemes that we are discussing, it's not about chasing the returns. It's about choosing which is the right tool for your financial purpose. So thank you so much, and see you in the next discussion.